Hey everyone, it's Jay. I just wanted to talk about something I thought of for the capital that I do have in my small account. Now, you've got margin for day trading, right? And most of the time, people think that they need to keep all of their capital accessible to have access to that margin, right? Well, that's not actually true. So, what I did, and I took a position in Square, and I had watched this, and I thought, man, this thing's really kind of moving up, and it seems to be gaining some popularity. And a few days ago, I thought, hey, I should put some money into this. I should just take the equity that I do have in my account and put it into this, since I don't trade a whole lot, right? You see my other videos, I usually just paper trade right now. So I thought, hey, why not put this in here, take a position and swing trade it and see if I can't make, 50 bucks, 60 bucks, whatever. If I'm making a couple of dollars a week on it, then no big deal. The risk is really low, right? I only had 550 bucks or so, and I took a position for 24 shares. Okay, it's not going to make me a whole lot of money, but like I said, if it can make me 50 bucks, then that's $50 I didn't have, and I'm not really risking much of my buying power. So even taking a cash position, I've still got access to like $2,700 of buying power for my day trades. So you can do this with a small account if you are comfortable with your technical analysis. Now, what I've got up on the screen, if you're not familiar with what's going on, this dark purple line is the 50 simple moving average, and then this is the 200 SMA. When these are both trending up and there's a significant amount of space between them, that means the stock is experiencing a very bullish move. And Square has definitely done that. You can see it's done nothing but go up. And let's see. I mean, it was down around 10 bucks last year. So what I did was I noticed that it had kind of found a base here around 22.40 the other day, and I thought, I should put a conditional order in to catch a dip like that again if it's going to bounce. And it was pre-market on Friday when, actually, I'm sorry, before I get to that point. So the very next day, look what happens. It literally touches down within 4 cents of that low. So I was looking to get filled at anything under 22.50 was my thinking. And then I thought, hey, it'd be easy just to make even $1 if it bounced back up kind of to this $24 resistance, or even up to the 25 mark, which was, to me at that point, I thought it's probably not going to stretch that far in one day. And after seeing this, I thought, okay, there's some definite support here. I'm going to put in an order for 22, I think it was like 48, 22.49 at that point. And I don't know what I did. I think I might have just put the price in the wrong box, but I just bought it at the market price, which happened to be 23.70. I watched it. It faded off a little bit in the day. There wasn't a whole lot of action. It's a typical Friday. There was obviously no catalyst, so it wasn't really moving. But I am a little bit concerned that it's now creating lower highs. I'm curious to see if this is going to hold up. But what I did was I ran a fib retracement from the gap up. So when it gapped up, I just used that as the base and the high that makes this move. If you're not familiar with Fibonacci sequence or retracements or extensions, there's a lot of research and reading out there that can be done. Some people think that they're complete garbage. I actually tend to think that there is some truth to what can happen and how you can use them to your advantage. So I ran a fib here, and I thought, okay, let's see where this pulls back. This is not quite down to the 61.8 line. So to me, this says that this is not a real strong pullback, and the stock should go higher. And then I went ahead and ran another retracement from the last significant low that it had to that high. And this makes me feel a lot better. So right here, we've got our 50% line from this last move. And most stocks will give back 50% of their gains. So to see this happen and then have it retrace to about 50, and then try to make a move up again. Kind of instill some confidence in me that I still made the right move getting in, even though I got in at the wrong price. But the fact that you've got this support level here, you've got the 50% fib level, makes me think that that will definitely, should, I'm not going to say will, there's a very good possibility that this is going to hold. Even if this trends down, I think we'll still see it break out. I put just an arbitrary price in there. I just kind of threw the next dollar up as my sell. I put a range order in to sell it if it gets up near 26. And then I put my stop down here at like 22.29. So it's got a little bit of room under here, but I think worst case scenario, I'm going to lose like 45 bucks if it actually gets down here and breaks down through this level. So we'll see what happens, but just an idea, if you've got a small account and you're not using every single bit of the buying power every single day, then this is a good idea to kind of maybe passively make yourself a little money. Put a swing trade on in a stock that is bullish. I'm not going to say to short a stock, because SureTrader actually charges you a 0.5% margin fee for any stocks that you're holding a short position on overnight. And depending on how big the size is, that can get expensive. I actually took just a little bit more than the equity that I had in my account for my position because I got in at the higher price. I got in at just the market price of 370, and I was actually doing my calculations on how many shares to take based off of an entry down here below around 22.50. So I am paying a margin rate. It's an annualized 7.5%, but it works out to like 0.2 of a cent multiplier. I actually asked SureTrader. I said, hey, am I going to get charged margin on my whole position or just the amount that my equity doesn't cover? And they said it is actually on your whole position. So keep that in mind. If you've got $1,000 in your small account and you're taking more than that just a little bit more than that $1,000 position in a swing trade, and you're going to hold it, they are going to charge you a little bit of money. For me, it's like 12 cents a day. So I could care less about holding this over the weekend for 12 cents. By the time I actually get out of it, it's going to amount to $1 or $2 that it'll add to what I owe them. So that's it for this. I just wanted to give you guys an idea on what you can do with small account capital.